Hello, everyone, and sorry about the late delay here, but we're here. It's 2 o'clock, and we're ready to start another COPEC Financial Wellness Daily Webcast. Today, we got a good discussion with Jerry Snyder, also one of the hosts and founders of COPEC. So we're excited to have you here, Jerry, with me. Couple things. Obviously, this first page is the disclosure, as most of you already know. And this disclosure has information about the COPEC program, our speakers, our affiliated companies, and also, because we're heavily involved, some disclosure for retirement strategies as well. So take a look at that. You can also see that on the COPEC education.org website. At the bottom of the page is a disclosure tab there as well. One of those will probably be early next year. So that's the information on the general COPEC and the financial initiative that we're really putting out there now. Today's topic, again, Jerry, thanks for doing this. Topic is, should I buy long-term care insurance? I know that this specific topic has been really near and dear to your heart as far as a passion that you've had in providing guidance and even working with some of the ancillary services like government benefits, like your your Medicare, your Medicaid, but all the private pay options. And really this is, and I want to put this out there, this is not to tell people to buy it. This is to tell people to become more clear on all of their options, this is one of them. And we do other programs on Medicaid and all these things. So this is really an opportunity for people to learn a little bit about this. So any kind of thoughts that you want to kind of kick off this discussion?
Good. I appreciate it, Jay. I appreciate being here. And Jay's right. It's been a passion of mine for many, many years. And Jay knows this too. Almost everybody that comes in to our office for financial planning or individual consulting, probably undoubtedly the most frequent question we get is, do I need or should I buy long-term care insurance? So, of course, that's why we decided to develop the topic. I might mention right away, too, that over the next few weeks, we're actually going to explore the same issue, but from a different standpoint. Today, we're just going to try to wrestle with, should I even consider it? Do I need to consider it? In future programs, we'll talk more about what your options are if you do feel like you need to plan for it. And so we'll get into that in much detail. And in future meetings, talk more about the policies themselves and what the costs are and what the benefits are. But let's wrestle, first of all, with the broadest question, should I buy it whatsoever? When I give this program, I like to start off, and I think most everybody in the audience will know the difference between, acute care and long-term care, but I'd like to cover it anyway, just to kind of bring it to the top of our mind. When we talk about acute care, obviously we're talking about doctors, hospitals, lab fees, outpatient services. To some extent, home care is generally covered. And obviously you're going to look towards your employer. If you're employed, maybe for those coverages, you might need to go to what we call the marketplace and purchase that privately on your own. Maybe you belong to an association or a nonprofit that provides it, but you're getting your acute care coverage covered usually somewhere from an insurance company or employer. Versus long-term care, that's a whole different set of services that come into play and go beyond really your medical acute care coverage. Included in that is some of the things I've listed here: skilled nursing homes, assisted living facilities that stand alone and just provide assisted living, continuing care communities. You'll hear maybe more and more about that. Those are communities that have all levels of care on one campus. So they may have independent living, but then they also have, if you progress into needing care, they have assisted living, and then even skilled care if you get to a skilled care need. So all those are on one campus. Adult daycare has become more and more popular. Facilities where you can take your loved one during the day to get care during the day, with the advantage of being able to bring them home at the end of the day, and they can keep their setting in their home or with a caregiver at that time. So it does help people who want to care for a loved one, but they need to continue to work, or they need to continue to meet responsibilities of their family. And then we talk, of course, about extended home care. Fortunately, technology allows us to do more and more care at home. And so there's a lot of providers of good quality home care. And again, we'll have some other speakers that actually get into discussing more about the different qualities of these different care locations, the cost of them, and the amenities that they provide. So keep a lookout for some of those programs which can help you as well. And even hospice is covered oftentimes under considered long-term care, even though it does involve, a terminal illness type situation.
Real quick, can you go back to that last page, Jerry?
I sure can.
So again, just to clarify, so let's say somebody is in a car accident, and because there's two kinds of long-term care, correct? One is, I think of like a car accident, somebody becomes paralyzed, right? Mm-hmm. Or even like a Michael J. Fox, Parkinson's, right? There's a lot of people who are younger also that might deal with this type of situation. Obviously, as you get older, you just might not be able to care for yourself across the board. But I wanted to use an example and make sure that we're tied on the same page of the difference between this acute care and long-term care. So let's say, for example, I'm in a car accident and I'm healthy afterwards. That's all acute care, meaning I went in, I might have had a surgery, I might have got, whatever it is, and then, I'm able to walk away. But in a situation where, let's say you became paralyzed, right? So you have a car accident and you're getting better, but ultimately, if you're paralyzed in that example, ultimately you stop getting better, correct? And then therefore, that 50-year-old or whatever it is that was in a car accident transfers from acute care over to long-term care. Can you kind of dig deeper into the true separation between those two?
And I'm very, very happy you asked that question, because first of all, a lot of people associate long-term care with just being older, and that is not the case. We're finding more and more younger people needing long-term care, kind of as you described. In other words, acute care does end when somebody does stop improving. And so that's when we talk about, and to use another terminology, they go into a custodial state, meaning, yes, they're not improving. So generally your health insurances, be it from an employer or you have that on your own as a private policy, yes, they are going to stop paying when somebody stops improving. And that's where you transition into acute care. So that's where these long-term care coverages do pick up, or at least that's when you transfer into or transition into long-term care. Now, again, Jay, I'm glad you mentioned that, because even things like strokes, you mentioned paralysis, MS, unfortunately, we're seeing a lot more MS kind of conditions happening at any age. We've had a number of people come into Alzheimer's problem, even in their 40s and 50s, the cognitive kind of issues. All of those issues can transition once somebody stopped improving into long-term care. Appreciate that question.
And I do have another question. I know I'm blowing up your questions here, but on the last one, the continuing care community, I know that, I, along with others, sometimes, and maybe you'll be touching on this sometime later, the continuing care community, do those usually replace a long-term care policy or other services? Is that kind of the point? It's built into the partnership of the facility versus a third-party payer? Actually,
in many cases, they don't. So they're going to provide the facility. If somebody goes in independent, they're going to be paying an apartment rent. So many of them, it's still pay as you go, even they offer the different levels of care. On the other hand, you're correct. There are some that will provide partial coverage for long-term care. Maybe they'll cover half of the assisted living or half of skilled care, but you still are going to be responsible private pay for the other half. There are few and few far between, if you will, that really would require a very large entrance fee, but if that is paid, then they promise to give life care regardless of what level of care you're into. So there are some that do that. And, you know, when you have a need or a family need, or you want to do pre-planning, realize that they kind of range all over in terms of how the funding works. Therefore, and again, we're not going to overstress the insurance today, but when it gets down to picking out insurance, you want to be very careful as to what kind of facilities they cover. And when you're dealing with a facility, then on the other hand, it'll tell you whether you need to consider maybe long-term care insurance, and if so, what amount.
Okay. Hey, I noticed on the next slide, I know that you've got, and I wonder, but, you know, we talked about the cost of care. Knowing that we've got limited time, I think that's really of interest to a lot of the attendees as to what they're dealing with. I was hoping you were going to go into that a little bit.
Yeah, and maybe we should start with that. It might make some of the other points here even more valid. So yeah, I've listed here why people are really considering long-term care planning in general. And the cost is a huge factor. And that, of course, depends on maybe what area of the country you're in, what area of the state you're in. So I'm most familiar with cost in Franklin County, and since most of the audience resides there now, we'll start there, but know that, for instance, care on the East Coast can be even as much as double the figures that I'm going to be mentioning. So of course, a lot of the cost would depend on the type of caregiver you would need to care for you, and the facility, maybe, if you're needing a facility, the type of facility you're in. So again, independent living, of course, maybe you don't need much care or very little care. So you're kind of paying an apartment rent is your primary cost. However, even in most of the independent living facilities, they will allow home care coming in. I'll defer the discussion on home care for a minute, but so in the Franklin County area, what we're experiencing for assisted living, and I'm talking about standalone assisted living facilities, to which there are many. And even within assisted living, there is a lot of different kind of levels of care, even within assisted living. So the prices can change dramatically, based on your amount of care need on a daily or weekly basis. But on average, we're talking probably around $4,500 to $5,000 a month for assisted living. So you might need continual care, but not around the clock type care, but you need pretty much daily care for what we call the activities of daily living, at least some of those activities. Eating, bathing, dressing, transferring from bed to the chair. These kind of functions is what long-term care usually necessitates. So assisted living is not hard to spend $4,500, $5,000 a month. We're talking about $60,000 a year very quickly. And so that's something that needs to be considered and planned for. Moving up to skilled care, and in both instances, you may have RNs and LPNs and therapists and nursing aides and those types of caregivers. But once you go into skilled care, you really do need 24-hour watch at least, or those kinds of caregivers available. And so your cost escalates to a great deal higher. And so we could be talking easily $7,000 a month, or I'm sorry, yeah, $7,000 a month, $8,000, $9,000 a month is not unheard of. So again, we're talking about $80,000, maybe $100,000, over a year's period of time. So, and then we're talking about home care. Home care can be a great alternative, of course. It's where most people want to stay. Again, if we look at, and all the home care agencies differ a little bit, And again, quality can differ a lot, so you want to really be careful and make sure you do the necessary homework to find the best home care agency for the situation. Again, it's not unheard of, even for nurses' aides or what we call non-professional people. Of course, you hope they're experienced and very good caregivers, but technically they're considered non-professional type employees, non-RNs, non-LPNs. Now you hope that home care agency is properly certified, and you want to make sure of that so their people are well trained. But those costs can be easily, even for the non-professional, $40, $50 an hour, and the RNs and LPNs can be a lot more, $70, $80, $90 an hour. Most home care agencies have a minimum of 2 hours. Quite frankly, they can do a lot in 2 hours, but again, they're coming in and taking care of custodial needs or needs that require help with activities of daily living. Eating, meal preparation, helping with bathing and things like that are very, very common. I have one example is my own father. My mother passed away, but my dad was able to stay independent for about 8 or 9 years. And he stayed in very good health. He stayed alone. He was very independent. But later on, he started to fall. And that's how a lot of long-term care needs present themselves, through a fall. He was extremely fortunate. He didn't break any bones or break a hip like many do, which makes them pretty much of a long-term care permanent situation. But he had come to the realization, yes, he needed help. And I was the only sibling I wanted to help. And so I volunteered, and really he needed help more in the morning, kind of getting started, showering and, breakfast and helping a little bit of getting him started for the day. And I wanted to help, and I volunteered to help. I was working full time, so I would need to get there at, maybe 5:36 in the morning. He wasn't too excited about getting showered at that point. So he really decided that he would accept home care. But I only found out later another reason for that, and that is he wanted to keep me as his son, not his caregiver.
Yep.
So that kind of leads me to some of these other reasons why people consider making advanced plans and accepting long-term care assistance. They don't, from a parent point of view, they don't want to be a burden to their children. And I listed that on the sheet here. So not wanting to be a burden on children is kind of a big one. Children are not responsible for paying a parent's long-term care cost. Fortunately, the laws haven't required that. But nevertheless, a lot of children often feel responsible and want to help with the cost. So that's an individual family decision. But parents don't want to put that burden generally on their child. So that is a big reason why older adults consider long-term care planning or a long-term care insurance, just to not put their children in that situation.
Hey, Jerry, real quick on the cost of care in general. I think we have about 5 minutes left here.
Okay.
On the cost of care, have you found that over the years, kind of like tuition at a university, even though inflation is kind of low, is the cost of care growing faster than inflation?
There again, I appreciate that question, because in general, medical costs themselves, of course, are run higher than the normal inflation rate for other goods and services. So and I think everybody's experienced that, the cost of their medical premiums, their cost of their lab fees and outpatient services. Everybody's, I think, seen that go up higher than inflation. And that's true with long-term care as well. Now, a little bit of a bright spot is that when we look at the cost of the care itself, meaning home care or facility care, we're seeing a trend of the providers, be it a facility or individuals. Now it's been rising at about 3 to 4%. So it's at least closer to kind of normal inflation that other goods and services have. So we've seen that stabilize a little bit, but when you talk about a 3% increase on these pretty astronomical costs, it is a big consideration and a big, big thing to be concerned about. And we factor that in our planning, that and the premiums too, if you get into the insurance, the premiums can be adjusted pretty frequently as well. So protecting income and assets is a big reason too. And it relates back to the cost that we just talked about. But and I'm going to kind of summarize with this, when it gets into planning, we put in hypotheticals of if an individual or a couple needs this kind of care, and we can see very quickly with the numbers that we've talked about how the income and assets can be affected. Let me mention this because I know we are running out of time. So how do we decide? Let's say, how do we decide there's going to be a shortfall? Well, we'd prefer you to go into a little bit more sophisticated analysis of this, such as going through the financial independence analysis that we talk about frequently, or the financial planning analysis. But if you want to do something on the back of a napkin or something, look and deal with some of those costs that I talk about. What if I would need assisted living? What if I would need skilled nursing at some point? And then take a look at your income and assets that you have available to meet those needs. Social Security, your pension income, and look at the sources of income first, and then do you see that you might have a shortfall? And then how am I going to cover that shortfall? Is it going to be from my assets, spending down those, or the investment interest and dividends off those investments? And if so, is that going to cover it? And if not, it may lead you to understand, hey, I've got a gap here, and particularly with the spousal situation, if something were to happen to me, I want to make sure my spouse lives independently for the balance of their life. So this would give you a quick view of it. What I'd really like to see people do is to go through that financial planning analysis. Well, whenever we have a program on this or financial planning, we always look at, yes, living. I hope you live a long and comfortable and healthy life. But we go into, what if you might need long-term care? And so if we see a shortfall on that, looking at all the variables and all the factors in a little bit more detail, we can come up with a more accurate, precise look at what long-term care needs you might have, and then make recommendations accordingly.
I think that's great. I think we're kind of wrapping up here a little bit here. We got a couple minutes left. If you've got a couple more, for those that are in attendance, obviously we need to wrap this up for 2:30, but we're happy to stay on longer for those of you that might be interested in having additional discussions, and maybe Jerry can expound on a couple of these areas. You can either send it to us directly or send a note through Q&A. Let us know if you'd like us to continue and if you have questions, but we're happy to go on a little bit longer. So Jerry, you want to wrap up a little bit as far as in general takeaway from today's discussion as best you can. And I know one thing that I think is also important, that I know we're not talking specifically about insurance, but if you are looking at that, covering the protecting your insurability is also another issue that we need to make sure that people think about before they become unable to get anything, if that's what the direction they want to go.
Exactly, and I hope you do tune into our other programs because they do fit together. And one of our programs is looking at all the options. So like this chart shows here, the first thing we do is to see if you can self-fund or self-insure, if you will. We don't want our clients or anybody buying insurance they don't need. So that's the very first thing we look at. And then we look at other options. The other extreme is Medicaid, the combined federal and state program that's available to us. If in fact, we don't do pre-planning, we get into a situation where we're spending down because of private pay, There's a lot of rules. Our elder law attorney will cover this issue, and we cover it in our other financial planning topics. So Medicaid is an option. We don't think it gives the best choices, but reverse mortgages, we're going to talk about that in a future program where you're using your home equity. They have become a lot more legitimate, so we're going to look at that. And again, all the different insurance programs that are available, the pros and cons, and how different ones work. So please tune in and join us on those programs, and we'll kind of put all the pieces together for you.
Thanks again, Jerry. Really good discussion. For those of you in attendance, if you have any questions or concerns, want some guidance, just send us a note, send Jerry a note. Happy to help out any way we can. Jerry, thanks for reviewing this real important topic. And we'll go ahead and see everybody tomorrow. So thank you so much for joining us and appreciate your time. And Jerry, thanks a lot for going over this.
And thank you.